Welcome everyone. How are you doing? Dang, dude, we got a celebrity in here, dude. We got Archon in the house. Dude, that's fucking a real good idea. Me too. Welcome everyone. How we doing? Oh, doing good. Doing good. Excited to talk about some trending markets, quit trying to fight trends and stuff. Should be a good night. Oh yeah, that QQQ for sure got stopped out. Yeah, no problem. Happy to be here. Love talking to you guys. Always look forward to doing lectures. Doing 183 of them in a week. Oh, you went on the blind smack on some PLTR calls. It was probably about time to get back in. Yeah, probably a nice buy down there on the lows. Might try to put in a reversal. But like what a classic like run up on news and then sell the news that never came to be. Oh, awesome, Peter. Love to hear that. That's what we're trying to accomplish with all these. We try to do live classes, whatever it is, 5 nights a week. Just because, there's always more to learn in the market. It doesn't matter if you've traded for 20 years or 2 years, you got a ton more to learn always. And so, that's definitely what we try to push in here is education should come before anything. We of course got some great alerts and stuff, but, our goal is for people to learn how to trade for themselves. And that should ideally be everybody else's goal. I mean, it's fine to be here and take those alerts, of course, many great trades discussed in here. But if you can learn it yourself, then you have something you can always fall back on. Yeah, Archon, I wonder if PLTR is going to be the one that makes you rich. You seen the guy who owns that company? I wouldn't trust him with my money. Okay, well, we will slowly get started here. Welcome, everybody. Thank you for being here, Dirty River. Happy to have you. Tonight we are going to be talking trending markets. And we're going to try to talk about, how do you trade them? What's a safe way to trade them? Something that I always talk about, if it feels like you're chasing, you're probably chasing. And so don't do that, and so we're going to, talk about identifying some trends, bigger picture trends, some of the tools that I use to, look at the big picture, the daily, the 4 hour, that kind of stuff, to kind of build your, I don't want to say bias because you never want to be too biased going into any day. As we've seen, all year long, the people who just have the bear bias have been blown out of the water. And there's even been a few times where the people with the bull bias have just been blown out of the water, so you always, when trading the market, you always want to be willing to, admit you're wrong and trade the other way. I'm not saying that it should be, you're in calls 1 minute and you sell them and dive right into puts. That's never a good idea. Like if you realize that you're flip-flopping your bias like 5 times on the day, chances are the market is either range bound or you should likely step away from trading. So we're going to kind of talk about some of the ways, how do we identify these trends? How can we trade around those trends? How can we, waiting for entry, all of those kinds of things. Something that I see in here a lot, and even in, people I talk to in the DMs, they think that, there's a trade on every candle of the day. And there's really just not a trade on every candle of the day. You can dramatically increase your risk reward by just waiting for some of those good entries to come for you. And so that's hopefully what we're going to kind of cover tonight. We did go over support and resistance and trends in a lecture last week, 2 weeks ago, something like that. And we ran a little long and didn't quite get into like some of the short time frame trend identification and how you can trade on things like that. And so we're gonna cover that today. But the main thing that we're gonna start with is some of that long time frame analysis, and just, I want hopefully some people to participate, maybe give some stocks that they're looking at, things that maybe they're looking for, and then we can look at those and say, what is the trend on these? What are, how should we be trading them? Should we be looking long or short? Is there entries around where we are based on where the trend is? And so I'm just going to start with one. Obviously, we're going to start with SPY. And so what I always encourage people to do, oh, those are from last night. What I always encourage people to do is always look at the big picture. If you aren't zooming out while you're trading and really looking at what the market is doing, then you're doing yourself a serious disservice. You're definitely going into the day doing a whole lot more guessing than actually trading. And if you aren't aware of what the market is doing, the best thing you can do is look at these long time frames and say, like the market is going up and it's basically going straight up, plenty of consolidation here and there, but it's going up, has been going up for a year and a half now. So you don't want to try to be the hero shorting things. Nobody's, impressed when you make money on puts, nothing like that. We can look at the big picture of the market and say to ourselves, okay, the trend is up. So at that point, you already can have a broad market bias of being bullish. You know, you should be bullish when not to simplify things, but like if the chart is going up and to the right, you should probably be long. And if the chart is going down and to the right, you should probably be short. You know, 2022, prime example, nice drawdown on the market, 25% or something, big old pullback on it, high rate environment. Obviously, be short because, in simplest terms, this is the way that it's going. The market is going down and to the right. So you likely want to be short there. And so, my big joke arrow also kind of shows you that, hey, you want to be trading with the trend. The trend is down. You want to be long or you want to be short. The trend is up. You want to be long. And it doesn't matter which trend you draw, where you draw it. Market is going up and to the right. Doesn't matter what trends you have. Currently, the market is going up and to the right. We're miles off of this trend. So doesn't show us a ton of information that we want. But even when we come to hear from those October lows, there's no denying the market is just basically on just a ripper. It's been on a ripper. There's no reason to be flipping overly bearish on the market just yet. Sure, there's a bunch of us talking about, potential pullbacks. I've talked about it. Tilia's talked about it. People who pay attention to the market have all said that, you can somewhat expect a pullback at some point. That doesn't mean 450. That could be, when we were having that little sell-off here last week, I talked to a bunch of people and my target, I really wanted, this ended up being an EMA that I was looking at, but I ultimately wanted that 500 test and, we fell $4 short. And so didn't quite get there. Now market is still pushing. So when we see something like this is when we want to say, hey, the market is trending up. How do we know it's trending up? If you want to be really technical, the market is setting higher lows and higher highs. So this was a low. This was technically another low. It's higher than the previous one. This was a high. It's higher than the previous one, higher than the previous one, higher than the previous one. So setting higher highs, setting higher lows, we know that the market is in uptrend, so we want to trade the market in one of two ways. We want to be looking to buy dips, obviously. However, how do we start to identify when we want to buy the dip? Can be a very, that can be somewhat of a difficult thing for people because unfortunately, a bunch of people started trading during this. So they saw the market go down for, give or take 10 months. So that's what they know. And they think that is coming back. But this came for a reason, just the same as this has come for a reason. So we know that, market is trending up. If we have a couple of red days, that doesn't mean turn into bear mode. I do want to point out that there's, of course, times to be shorting the market. Understandably, we can even put this top trend on up here. And if we draw this top trend, there's times, there's places to attempt to short the market, even though it's strong and it's trending up and blah, blah, blah. But we need to have a reason to short the market. You don't want to short the market because you think it is going to come down. You want to short the market because, as an example, we're trending up. Generally speaking, in all trends, there will be two trends. There will be a top trend and a bottom trend. So when we come up to these top trends, it can provide, a nicer risk reward trade to be short than long. So this one played out really, really well today. It's probably going to get off on the 5-minute, but we can see we were pushing up to this trend, new all-time highs, very little to, reason to be looking short. And then the reason I took a trade up here was you could be making an argument for a double bottom. Stop is going to be just on some, any sort of new substantial high. So there was reason to be short in the market. There was no reason to chase the long up here. And so what made me see that was seeing that double top forming, as well as knowing we're getting up, to the top of this kind of little, uptrend that we have, wedge, whatever you want to call it, that we have going on here. So you always want to be cautious there. Well, we also have the bottom trend. So this bottom trend was set by this candle. We know the trend is up, and now we have seen these trend touches often give a bounce with a pullback, often give a bounce, and now we start setting a top trend with a pullback. Bounce didn't quite make it, but with a pullback up here, this is how trending markets work. So where the main issue arises for people trying to trade something like this is they get suckered into believing that the market is going to, continue in the opposite direction of the trend. So here's a prime example day, big gap down on this day. People were guaranteed chasing short down here. Not us. Should have been looking long, as soon as we come down to this trend, we should be looking long. And why should we be looking long? Because the risk reward trade is so much better long here. If we get long here, our stop can be just outside of the trend, 50 cents below us. If we want to widen it a little bit, we can use some of these previous breakout points, have it be 60, 75 cents, $1 below us. Ultimate target is, well, in this case, it would have been 500 just because big whole round number, obviously. We've discussed that in other lectures, though. But ultimate target from here is all the way up to give or take 505. We didn't quite get it this time. However, you would have got a $10 move up on SPY, risking $1 on the downside, $2 on the downside. Yet again, they sell us down to this trend. The second they buy us back into here, you can look to be getting long. Did this provide a short opportunity outside of the trend? Of course, you likely had to be fast. But as soon as we're back in this trend, you want to be looking long. It works the exact same way up here at the highs. We're pushing to this trend. That's where you want to look to get short. For the exact opposite reason of getting long down here. If you get short up here, once again, your stop $1, $2 at most overhead, targeting all the way down to the lower trend. You, of course, don't know if you're going to get that move. You have to be trimming positions. Just holding huge gains and swinging for the fences is never the right idea. But you want to be short up here, long down here, because the risk reward is best. We've seen it on a lot of trades, one that we even talked in lecture last night. Breakouts don't like to hold, and markets don't like to, let me rephrase that. First breakouts don't like to hold, and markets don't like to set new highs and then just hold on to them. I mean, we've seen it on SPY, set a new, substantial all-time high, pull back, set a new substantial all-time high, pull back. It's been doing it this whole time, I don't know where all-time high started. Here's big resistance at old all-time high, set a new one, pull back, set a new one, pull back, set a new one, pull back. Like this has been, the cycle for the last month and a half or whatever. And it's typically what markets like to do. So we know that most breakouts don't really want to hold. So don't be long at trends, assuming the breakout is going to come. One that we talked about yesterday, or whenever that was, Sunday. One that we talked about yesterday, XLE. We talked it yesterday, big consolidation. And then we said, hey, we pushed up to this level. We know that typically first breakout doesn't like to hold. So all of the energy trade chasers that thought the breakout was going to hold got blown out of the water. They're full on liquidated today. I mean, like this is a really big drop. We had it was almost 1.5% down because breakouts don't like to hold. So when you're in a trending market, and I'm not saying, short all-time highs, it's always going to work because you can see, we set an all-time high, all-time high, all-time high before we pull back. But as soon as you see a sign of exhaustion after these nice big pushes, even today we had a weird day. Technically close red on the day, but technically have a green candle because we gapped down. And so we closed above the opening price, but we didn't close above or even with the closing price on Friday. So trending market going up. We had it today, nice short. I mean, obviously, this entry, and that my trend gets bumped up obviously a little bit. This entry was a little bit early if you were looking for the trend short, but on fresh all-time high, very volatile candle, potential double top. This is a short that I like to take, you know, even though it's a very strong day, very strong push. This is just kind of those types of setups that people, you know, they get trapped in. It was a range day for most of the day. And then you had the bulls wanting to scream bull flag after one big breakout candle that ultimately didn't work out for him. But that's what you always want to look for to trade a trending market. And you'll notice where all of my entries, you know, ideal entries are in this trend. This is very similar to how we've been discussing ranges or discuss ranges at the last class. You'll notice my entries are at the extremes. That's where, you know, it's easiest to trade. Don't get me wrong, there's, you know, intraday things we can trade in the middles of all of these candles. However, when you're looking to swing long, you know, say you're trying to swing long SPY or you're trying to swing long SPY names, don't swing long at highs, swing long at lows, you know? And you'll notice, where are none of my preferred entries? In the dead center through here. You know, I preach it all, I preach it all the time. Try to preach it in trade floor, you know, try to do all of that. Don't enter in the middle of ranges. Don't enter in the middle of trends. Don't enter in the middle. These trades can all go 50-50. Maybe you break above this, or maybe you reject it. You get one close above it. If you swing long, you're blown out by $4 the next morning, you know? So never enter in these middles. And again, if you're day trading, you know, if you're day trading, if you're scalping, if you're doing any of that stuff intraday, obviously there's trades basically up and down almost every single day. You should still mostly be focusing on the with trend trades, of course. You know, if market is in a strong trend, you still want to be in dip buy mode, but don't be scared to hit a couple shorts if the market presents it, but think of them as scalps. But this is what we see: market trending, buy low, you know, buy the dips. You'll hear me and Flip say it all the time. If you're buying calls, you buy it at the bottom of candles. You don't buy it at the top of candles. There's times where you can catch a nice breakout, but more often than not, you aren't going to catch the nice breakout. But how can this, you know, how can this work for us on the shorter time frames? And so that's what I want to talk now. Trend, you know, as we've been saying repeatedly, trend is up. So you will see those types of reactions intraday as well, where, you know, if we get a breakout, you know, we're seeing our first breakout of the day and we're seeing a pullback here. This breakout, you know, with the consolidation back, people probably want to call it a flag. I just call it consolidation. It will likely hold to the upside. You know, we will likely get a second leg. This is, of course, statistically speaking, it's not going to work every single time, nothing like that. But these types of moves will consistently hold because the market is bullish, you know? So you want to stay bullish on the market. Then you want to look for things like intraday trends. Something like this, you know, maybe you caught this short, you know, maybe you caught this short right here. Nice one. Well, when you get down to this trend, it's the exact same thing. You don't want to be short down here. I think this even ended up being around the hourly 20, or maybe that was QQQ. But you don't want to be short down here. You know, the put chasers are getting blown out down here. And if we just draw a trend and we know market is bullish, we likely want to be looking long. Obviously, the big breakout didn't ultimately work. Nice double top on it, as we discussed, but you ultimately want to be long at the lows and you want to be short up here at the highs. So anytime you see those types of moves, you know, take into context what the overall market is doing. If the overall market is bullish, then you should be buying dips. You should be looking for long entries. You know, when we say buying dips, it does not mean buying the bottom of every single red candle. You know, you want to have some sort of idea of what the market is doing. You know, you want to pull back to support. This one is arguably, you your very first lower high or higher low right here. So once this low is set, you are officially, running it up. The market is now technically speaking trending up. So when you see pullbacks, flags, whatever you want to call them, those can be your entries. Then as you go up here, start pushing new highs. Obviously, you want to be trimming off positions on new highs because the market was mostly ranging. And then you want to be looking to buy dips down to here. Anything like that. You can, of course, trade the ranges intraday, short at the highs, long at the lows, but 10-cent ranges are tough to make money on SPY. So pretty untradeable. If you're long, stay long on something like that. However, we can go back to some other days. And I just scrolled back looking for things that we can look for. So one thing we want to know, trend. This is our daily trend way down here. Big push up in the morning. However, within a couple candles, within the first 5 candles of the day or whatever, we have technically set a little bit of a double top, lower high, which is technically speaking a downtrend. So now the downtrend is set. Market is overall bullish, no denying that. So market is overall bullish. However, they're showing that they want to sell. So we can start to, always look left to kind of find our intraday resistances and supports. And we can start to say, hey, technically speaking, market is trending down. So bounces where we started to get a lot of rejections, you can short those with a tight stop. And try to catch moves like this. Sometimes they work, sometimes they don't. But market intraday trending down, so you can look to short them with a tight stop. Still not ignoring the fact that the market is in a very strong uptrend. So shorts are available, smack them when they're there, but you should still, bigger picture, always be looking for dips to buy. This is one, did we pull down all the way to our trend? Nah. And, we ended up a buck 50 or whatever away from it. So, you wouldn't have necessarily known to just dive out of your shorts down here. You could have looked at some of this pre-market stuff, obviously, but you wouldn't have necessarily known to dive out of your shorts down here. But knowing that the market is trending up, strong bull market, like across the board, you'd always want to be running those counter trend because, if you're shorting it, even if the market is showing weakness on the day, it is technically speaking a counter trend trade. So when shorts are available, take them. If market is putting up, big double tops, if the market is putting up, some big double tops, anything like this, where you might be, potentially looking for some shorts, then great. But you need to still have those defined stop outs on anything like this. You aren't looking for gigantic moves. And then still, big picture, when we're taking dips, we can still see market dips. Ultimately, the dip buy pays more than the short. So that kind of goes back to our, where is the better risk reward at? And when the market is trending up, market is bullish, we can all have our opinions of things that should happen or whatever. Like I said, I expected a 500 test. Didn't happen, no, like, I don't care. It's nothing to worry about there. But trade what the market tells you is going on. I might have wanted the 500 test. That doesn't mean the second we got good data and buyers showed up, I completely, I'm just going to ignore all of the stuff that tells me to go long and stay short. It means I'm going to admit I'm wrong and I'm going to go, short, obviously, or go long from being short. Obviously, you do what the market tells you to do. You have to keep your opinions out of it. You have to keep guessing out of the equation. This is one, wanted to go back. Market, strong uptrend, no questions asked, setting new highs up here, very, very close to this trend. Reasonable short. Then you might say, well, hey, look, it kept running. How might I know to do that? And so this is going to kind of go back to what we talked about, and we'll see how this line sticks around once I zoom into the shorter time frames. We're going to kind of talk about this, how we talked about trading ranges. You need to have price targets. You need to have an idea of, what you could get on a potential pullback. And so one of the great ways to do it is look for that mid ground. If you are short up here, your target, we're up at the highs. Like I said, I'm not going to be swinging calls way up here. If anything, I'm going to be looking to swing short. So if you are short, you can hold that trade over the night looking for this mid ground. There's no guarantee that you're going to get it, but at least the risk reward is there to say, I'm not going to swing long at highs. I'm going to swing short at highs, look for that mid ground. And then, if we get below it, that can kind of turn into your stop until ultimately we get down here close to this trend. You obviously want to be exiting any sort of short position because that's how the market works in when it's trending. You will, if you really think about it, you will get consolidations with breakdowns, consolidations with breakouts, and then back into consolidations, breakouts, consolidation here, breakout, consolidation again, breakout. That's how the market is going to trend up. They aren't always just going to be an NVIDIA or SMCI chart where they just are straight up vertical. Generally speaking, with the market, you are going to get, push up, followed by consolidation, followed by either push down or push up. And it works the exact same way, even if we zoom out, to longer time frames in downtrends. More often than not, you're going to have a breakdown, followed by consolidation, followed by another breakdown, consolidation, breakdown, attempted breakup that fails, so you want to stick with, going with the trend. Like when you're looking at weekly candles like this, you pretty well just want to stick with what the market gives you. Don't be overly greedy short. Don't be overly greedy long. But this is how, I identify most of my trades throughout the day. I look at any sort of trend on the larger time frames. Then I go to, maybe previous day highs, which obviously today we talked about this one in class too. Previous day highs, pretty risky to be there, or to be long there. Set that pre-market low. You don't really want to be short down here. And when you see that we are between the previous day high, I mean, really, this was pre-market high also. When we're just stuck between these two, plan on a range day. Don't plan on, big breakouts. If we do get a big breakout, more often than not, plan on it, plan on it going, plan on it failing more often than not. And so that is how we want to trade any market anywhere. I get it. People are trying to short SMCI or NVIDIA or whatever. But you need to trade the market that's in front of you. You need to not trade on feelings, and then always be aware of where the market is big picture. I think that it's one of the main things that people really kind of miss out on in the market. They like, so often I'll see people, swinging long before breakouts come, swinging short at literally the lows of ranges, or swinging short at trends, thinking the selling is going to continue, the buying is going to continue, whatever it is. And they frequently get blown out of the water. One thing that Al Brooks says is the market does a very, very good job at printing convincing candles into breakouts or breakdowns that ultimately fail. Our candles the last couple of days are kind of a prime example. We have strong breakout candle closing near its high, very little wick on the bottom, very little wick on the top. This is the type of candle and type of breakout candle that when you see it, I won't say you always should, but it's a nice place to swing long, knowing that your stop is going to be below there. But we were so close to this trend. Do you really want to swing long looking for 30 cents upside to the trend? Because I don't. And then we see, this was convincing, leading into this being convincing, leading into a red day, And so that is the market doing what it does a lot of the time. It will convince you that the breakout is coming, or it'll convince you the breakdown is coming, and then it will completely blow the other way. It works both ways, short and long. But always be cautious of those very convincing candles that also bring you to, a strong support or a trend line or whatever it may be. Because frequently your trade is not going to work. Again, XLE was that prime example. Everybody they've been trying to catch that energy trade for a long time. For God, 2 weeks now, people have been trying to catch the XLE breakout, this one, and then straight into more consolidation. So people have been trying to catch this breakout, buying calls up here, getting blown out for days. Finally get the breakout, and all the call buyers of last Friday got smoked, like we said. So be cautious of buying breakout candles. That's why people like me and Flips frequently tell you, look for the breakout retest. The people who are swinging long, scorched today. The people who looked for the pullback realized that we instantly broke right back into the range. Nobody's longing this again after selling like this, So excellent short entries. Again, if you didn't get the first short entry we talked, excellent short entry again, even another short entry. Maybe you stopped out. I wouldn't stop out until up here. Looking for that ultimate 86. Hopefully they don't only do it in the after hours, but easy shorts on the market when you start, or longs on the market when you start to understand, hey, those breakout candles or breakdown candles, no matter how convincing, frequently don't hold. Okay, so with that, we've covered what I look for when I'm trying to trade a trending market. Talked about my entries, talked about where I would exit, talked about just having that patience to wait. We want to wait to buy, to get entries here. So the only other thing that you always need to take into consideration, because in my opinion, and it all depends on what school of thought you are in the market, but in my opinion, in my experience, the market moves on trends and support and resistance. As the easiest thing in the world to back test, because you slap a line on the chart and you see if it works. Nice short opportunity today after a big breakout. I'm sure a lot of people wanted to swing, short off of this. I'm personally not, because market is still strong. I'm still looking to be a dip buyer more than anything else. So I always want to take note of, hey, this was previous all-time high. I only set 4 or 5 days ago. So we want to be in dip buy mode all the way down to like 510. If we can get that sell down to there, we want to look for that bounce. If we break there, to me, maybe it comes tomorrow. That should put us here. Maybe it comes the next day. To me, there is no risk reward to be short to try to catch like a buck move down when the market could very well bounce off that 510 and run us up to new highs or 515 again. So still, as we're getting tighter and tighter in this wedge, I'm still waiting for dips. Of course, if intraday things show up, to short, then yeah, short it, no questions asked. However, look to buy those dips as long as we're in trend. And then even if we give up trend, that doesn't mean just swing short. We can see down here when it didn't work, even down here when we gave up when we gave up this lower trend, shorts didn't work. They got blown out. Again, shorts didn't work, got blown out. So, if we break this trend, you want to see us, maybe giving up some of these previous supports, maybe even looking to fill this gap on the downside. But you want some confirmation of that. You don't just want to say like, oh, we got a 15-minute candle closing, below 510 outside of trend, I'm going to short it, because it's likely not going to work out for you for all those reasons we talked about. Most of the breakouts, most of the breakdowns will fail. So you want to be very, very cautious there. And as I said, because this wedge is getting tighter and tighter, I'm still in dip buy mode. We'll see where we open tomorrow, but maybe we take a little buck or two gap down. I'm still looking to buy the dip. Or if we can break back over this previous high we had on this candle, I'll look to play us back up to this trend, 516, something like that. So that's what I'm looking for on SPY. similar but slightly less bullish thoughts on QQQ, obviously. But with that, and unless you guys want me to just kind of go over QQQ as well, we can do that. But I want to go over some things that you all are looking at. Let's look for some trending stocks. Like, let's look for some easy trades, you know, no guessing, none of that NVIDIA chasing nonsense, SMCI gambles. Like, I'm not impressed by those trades. Let's look for some things that are trending up, down, actually giving, you know, reliable entries, not buying $500 out of the money contracts and, you know, praying and making money on them. Let's look for some real trades, you know? Based on trend line, SPY might go to 505. Nah, 505 is way down here. And you know, this is here. So if it came today, yeah, but you have to remember tomorrow's daily candle and then the next day's daily candle. So trend is moving up. So the low gets higher as we go. QQQ. Well, that's the first one I see. So we might as well just pull it up. And we'll get those fibs out of there. QQQ today. Actually, I did kind of want to show you those because somebody asked about, you know, how are you, like, how do we trade QQQ? And so this was just my really simple method today. Said, you know, look for some of those pullbacks to maybe that 61.8 or 50. And we got nice pullbacks on these fibs. You know, they held us where they should. They broke us down to the places we wanted to go. So fibs can be super powerful tool when you're trading, you know, at these all-time highs. However, when we zoom out, you know, yet again, big picture, and I should be no surprise to anybody, because, you know, really technically speaking, SPY and QQQ are very, very similar in their holdings. So obviously they are going to look pretty dang similar. So we have our trend here. We obviously didn't push up. We didn't get the push that SPY got on QQQ today, or same size push. So it didn't quite get up there to that trend. And for me, we are kind of in that, you know, no trade, middle of the ground area. Places where I'll be really looking to do any sort of dip buying on QQQ, gonna be down here around this 440 if we can get the pullback to there. Otherwise, breaks of highs, looking for really scalps, you know, couple bucks, not looking for big moves, again, not looking for breakouts. And then again, if we push up to that 450 area and that trend, ultimately we'll be looking to short it. But for me, you know, and for I hope everybody at this point, like, please quit being bearish. Well, the market will probably die now that I said that, but you know, look to buy dips on tech. You know, have people made money shorting it? Sure, but always take in consideration that had they bought the dips instead of shorting the rip, they would have made more money. So that's the goal for everybody. QQQ, same thing, strong uptrend. You know, like just insane run off lows. I mean, almost a $200 run off lows at this point, or I guess it's 160 bucks off of lows right now. I mean, just a truly insane run. So don't jump in front of the freight train. You know, I get it if you don't like Nvidia or whatever, or you don't like Apple or you don't like Microsoft. Like, these companies are putting up unbelievable earnings, guiding huge. Like, this run in QQQ makes sense because the companies reporting are putting up numbers to back up their claims. So the run makes sense. You know, people always forget that QQQ, it's an ETF, so they have holdings. So the people who issue QQQ, you know, Invesco, are not dumb. They're very smart. So if you were building a tech portfolio and you were an ETF company, you're likely going to have very large positions in the biggest tech names, you know, Apple, Amazon, Microsoft, Google. Yeah, Tesla's really hurting them these days. Nvidia now, you're going to hold those companies. So when you hold those companies and they put up great numbers, you get big runs like this. So, like, kind of checks out. You know, this isn't just like market manipulation. This is just like profitable companies are becoming more profitable. That's kind of the goal, you know? So QQQ, don't jump in front of that freight train. I mean, I would love to get a nice short on it, retest some of these, like, you know, some of these lows down here, but I'm not planning on it. I mean, I'm still just looking to buy dips and scalp long, you know, it's been the best thing that I've found to trade. Intel, that one makes me mad. Is it moving yet? Oh God, of course now it wants to move. That's hilarious. Uh, Let's see. Let's go back to the daily. I mean, it is trying right now. Are you in this one? It's holding it currently. Really nice one. Big gap fill to the upside. I mean, I think that there's a lot in the way of that whole gap fill. Funny that they closed it almost right there. I think that there's, some of these major lows are going to be, those are going to be in the way, obviously. Let me take the big reject off it. This one I'll be watching for, going back to what we've been talking tonight. We'll see if this wants to hold. Obviously, like we pull back to this 45, 44 area, awesome place to try to get in calls. Very tiny risk. I mean, you could stop under 45 if you want the wide stop, but really any sort of hourly close down there, 45.20 area, I guess 45.30 area, risk at 20 cents. A great risk reward trade. If it ultimately looks like it's going to give it up, then try to ride this back down to the lows. Intel's one that's just kind of had trouble getting it together while everything else is gone. But been range bound for a while, and we know that range bound equals big move. So worth looking at for sure. Nice eye on that one. Thank you for actually getting my eyes on that one. That one's good. Costco. Cost. It's got earnings. Who cares what it's gonna do? I mean, yeah, I bet its contracts are so expensive it's not even worth trading. But no denying super strong uptrend going on Costco here. Wow. Talk about easy dip buy, but strong bull channel here. Ultimately failed to break out, probably offered a nice little short opportunity there today. But still not something you want to be short on. This thing's up $150 since the beginning of the year. Good year for Costco so far. Let's see what this earnings gives us. If it's strong, awesome. Could see continued breakout. But any sort of dip buy on this thing, we start, and of course, with some pretty good earnings, could the dip should be bought on Costco. It's been performing very, very well. But yeah, nice strong uptrend, great identification of that. If you are trying to trade it, be super careful going into earnings, but obviously short up here at the trend, long down here at this trend, stops, below it, or depending where we hit it, you can always use a previous low or anything like that. Nah, PLTR I ain't sold on yet, Rev. I do think I missed it. These lows, obviously, the entry, if somebody caught it today at 23.50, you were on it. If you were swinging here based on S&P 500 inclusion, well, you should probably hop off Wall Street bets. Those guys are always wrong. But if we can hold down here, if we can get this full test down to this low, I will absolutely be long in PLTR stops below 23. A little wider stop than I might normally use. I might even go all the way down to 22.80, but I'll buy time. It's so cheap, it's worth it, Somebody asked about the crazy debt we have correlate with the market. No, technically it does not correlate. I mean, these are unrelated markets. A lot of people forget that the Federal Reserve is, no denying Powell and all those people have a very, very, very large impact on the markets when they say things, equity markets specifically. But the Fed's focus is the bond market. And we are seeing craziness in the bond market. TLT still just clobbered. So watching those yields, watching the bonds, watching the rates, it's all very, very important. However, equities are their own beast. The only way that the Fed has any involvement in the equity market is through the reverse repo market, which is a bit more advanced than we're going to get into tonight. But no, I mean, these are investors. These are people, this is technically, I mean, there's of course day traders and stuff out there, but all of this money that's in the equity market is technically just investment money. These are people with enough money to trade, and so they aren't as concerned with the debt, obviously. What's up with AMD? I don't know. I mean, it's on the moon. Yeah, it's still just solidly on the moon. I mean, God, when we were talking yesterday, I was like, I hope we get a dip to 200 to long it. Did not happen. Big sell, big rejection on it today, though. So that is a little interesting. Yeah, how much should we end up dropping from those highs? $7. Nice sell on that. Down $7. I mean, but still, like, I mean, nice sell, sure, but like, of course, like we're just blasting new all-time highs on this thing. So it does get a little bit tricky to trade. I think yesterday when we talked, I wish I would have left them on. We ran some fib extensions, and I did it from here to here. Looking for this, I wanted the breakout move for the fibs. Let's see. I mean, we ended up getting a nice push off of it. Obviously, it would have been a tricky one to buy. I'm sure that was fast this morning. I wasn't watching it, but stops flow there and ultimately got that entire push up to that 23.6 on the huge breakout move. So, uh, you know, that's how I'm going to be trading AMD going forward, basically just using those like intraday levels. And then if I feel like I really want to look for some targets, like it's going to get moving into those all-time highs, I'm going to run a fib, whether it's on multiple candles, whether it's the whole breakout, whether it's the high to low breakout, all of that will kind of depend on the type of trade that I'm looking for. But AMD, just that prime example of, breakout, consolidate, failed breakout, technically, that turns into big consolidation for a huge breakout, followed by a whole bunch of consolidation for weeks, met by a giant breakout again. So let's see if we can get some consolidation on this above 200. The market is at a turning point on AMD where it has to decide if this valuation is worth it. So that 200, that's what I was saying to everybody in class last night. That should be your line in the sand. Of course, there's short opportunities, like the thing sold $7 today. Shorting it paid really good money. But still be looking to buy that dip down to 200. If we break it, then you can kind of look to short it to maybe go test some of these lower levels. But like, let's be real here. You kind of got to be brain dead to jump in front of the chip trade short most of the time. Put seem to pay way faster. I mean, not really, because like what like I don't know. I don't want to get into it, but it's just an illusion. Archon Airbnb from the shower. Square. What did Airbnb have earnings or something? Oops, A B and B, right? Oh, not earnings a few days ago. Ooh, nice dump on that thing. Wow, that was actually a really nice sell on Airbnb. Square. Block, whatever it's called these days. Oops. Um, very little interest for me up here. Definitely would not be long on it up here, personally. I know that much. Yeah, not where I would be looking long on this with these tops and failures. I would honestly, what I would have been watching if I was watching this thing would have just been this little sneaky trend right here. Look for that retrace on it to get short. Now I think you're likely shorting or chasing the short trade. Big bounce up. Could it come back and retest the 74? Sure, but I mean you're just in the middle of a range at this point, so really no trade I like on Square there at all. Would offer an excellent short if they ran it down $11 or whatever, $9 back to this gap fill. But you don't want to be in that trade until these break. If you're entering a gap fill up here, you're doing it wrong. You want like breakdown and some volume picking up to really carry it through there. Unfortunately, this one consolidated for so long before that breakout that you would really need to have your eyes on these to, if you were trying to catch that gap fill, you need to be out or trimming pretty heavily around here. Neo, I had my eye on Neo. It's got earnings tomorrow morning, or what are they this afternoon? What'd they do? Well, nice sell on Neo. Came right to the bottom of the range that we had talked about for where you want to be buying that thing. Earnings, before the bell. Well, we'll just have to see what it does tomorrow. I won't be trading it. I like to give things the 3-day rule. Could die, could rip, but too late now. We'll see what happens. What I expected gold, like we've been saying, I mean, it's be bullish on gold, be bullish on Bitcoin. Those things are running right now. Big break on that thing though. Wow, you don't see a $3 move on the GLD very often. Would we get to an ounce on it? 2100. I mean, yeah, just insane move on it. I got to be all-time highs. No, not quite. Still running short of that all-time high, huh? Interesting. Let's see. GLD. GLD probably getting pretty dang tradable. I mean, you want to tread light on. I mean, me and like so many people have been trying to catch the move to 200 on this thing for so long. I wonder if it finally comes. Let's see, where is this previous high? These were the previous highs over here. Definitely broke that. That man, if they want to be nice, buy that dip down to 193.30. Um, Otherwise, this is the all-time high on GLD. Now we had a little. Let's see, we're gonna go back more time. So that's really the only one we got to care about right there. Really, that 194.50 stops under 193. Nice dip buy on it. And buy time. Uh buy time when you know you're trading something like GLD. Those contracts are cheap. They move really, really well. God, what just a breakout it had. I actually hadn't looked at this chart since this morning. What a move that thing made. But really I like that pullback. If that pullback comes, I'll be in there. I'll tell you that much. I will definitely be in there. Yeah. What means that everything it's an all-time high? Everything's at all-time highs for the most part. I mean, anything that matters is that all-time highs are pushing it. Best trade idea for tomorrow. So again, the one that I'm sad I missed, our Apple trade that we talked yesterday. Let's see. We said, oh yeah, and we didn't. This is the only one we didn't have on there. Yesterday, low a day. We said Apple gets up to 180. You want to short it. So the short would have worked really nice. Then the next thing we said was, hey, if Apple wants to give it up and we're below any of these levels, look for those retraces back up into there, and this one was tricky because I looked at it, saw it here, was not paying good enough attention to realize that this is pre-market low. And it was pre-market low, super obvious short entry. And then our target was, I don't remember, we took it off the daily. I said, if it gives it up, we can ultimately look to, somewhere over here for these lows. And that ended up being exactly where we bounced. I unfortunately missed it. However, buyers showed up heavy on Apple today. I might be looking to, get a little bit long, get like nibble long on this thing. Especially if we can start to reclaim some of these. I bet we push back up to this trend sooner than later. But who knows? So Apple, big watch, and then Amazon, still the big watch. Unfortunately, we talked this one in class the other day too. Wonder which one we were on. This one. So still wanting this pullback to here. However, this rejection that we had, this rejection that we had at 180, this is that range that we charted in class, and we said yesterday, you're insane to be long up here. We ultimately fell about 30 cents short of where I said you would be insane to be long up here. So offered a really, really nice short off of there. However, I'll be kind of playing hopefully today's range. If we can, bounce some of these lows, I'll be looking to get long. We do have data coming into tomorrow or after the bell tomorrow. So that's going to kind of dictate a lot of things. But we had a lot of these names sell down to support or buy up to resistance today and close going into the market tomorrow. So we'll see what we want to do. But Amazon dip buy, one I'm really watching. Apple dip buy, one I'm really watching. And then other than that, it will be SPY or QQQ short back to their trends if the data is bad. Because I don't remember the exact, I want to do SPY first. If data is bad, I imagine we'll go visit this 510 pretty rapidly. So I'll be trying to get short down to here. QQQ, same thing. If data is bad, Yeah, I won't say we'll get all the way down to 440, but we could get down in that 440, 441 area. So I'll be looking to play that short. Otherwise, break above kind of yesterday's close and today's open, and look for the push up both on SPY and QQQ. SoFi, what's it doing? I don't think it's quite there for me. Oh wow, it is actually getting pretty dang close to there for me. Um, Right on, Ralph. Thank you. I really appreciate that. Oh yeah, 6 o'clock now. So if anybody's got to get out of here, thank you for being here. Really appreciate y'all for showing up, talking trending markets, finding those easy trades for us. Thank you. So yeah, SoFi actually getting pretty close to that dip buy area. I mean, honestly, you can just slap some right about there, that 853, and lining up with that trend. Really great place to try to get long. Stops below it because it's SoFi, so it can just, I mean, if you want to talk about something that can't hold a breakout, it is SoFi. So you're risking it with the long trade here. However, it could offer the very nice short trade if all of this fails. So we'll see. And if that is gonna do it, thank you all for being here. You guys are the best. Appreciate you for coming and hanging out, talking trending markets with me. Hopefully y'all learned something. If you didn't or didn't understand something I said, as always, my DM's always open, so feel free to shoot me a message if you want. Yeah, thank you all. Thank you so much. And we will see you all tomorrow. Trade safe, have some fun. No, Archon, you're blocked actually, so that's it's not gonna come through, I don't think. Okay, right on. Thank you all. We will talk to you soon. Thank you so much. Full port.